Hey folks, Dan Frio here. When we're going to talk today stocks and investing. So I asked my son, I conned my son in. This is my oldest son, Marcus. He's here to join us today. So I figured I'd ask him this today to give you guys a little bit of an entertainment figure. So here's what prompted me to do these. I do videos every day on YouTube, and the most of the comments that I get all the time at the bottom are people saying, Dan, I don't have any money. I have no money. I'm broke. I'm never going to have any money. We got to get rid of that mindset. So what I thought I would do, I started doing this on Stock Talk Tuesdays. My whole goal was basically just to educate you guys if you want to kind of get yourself to the next level. So that's the whole point of these videos today. So I asked my son to come over, and here's what we're going to talk about in today's topic. How do you really invest? Now you see people saying, okay, I invested in Bitcoin and I made a bunch of money, or, the stock market's up last year. The S&P's up, 25%. You're sitting there, oh, great. And what the hell are they talking about? So, that brings in Marcus. So when Marcus first got out of school, this kid's a brainiac when it comes to math and numbers. But when he got out of school, I think there was a learning curve there when it comes to investments. And I don't even know how he got started in this. We talked a couple times recently, and he's like, well, you used to tell me just buy like a fund or something, put it in there, and just forget about it. So that's what I started doing when I was still working and living at home. So I figured I'd give his perspective. So Marcus, thanks. Thanks for joining me today, buddy. He's like, hey, I'll join you. What are we talking about? What are we doing? So I kind of threw him a curveball, but thanks for being a good sport, Buster.
Nice. Thanks for having me.
You betcha. So when you got out of college, and the first thing is, I mean, you were blessed enough that you got out with not a lot of debt. Probably some of your friends had a bunch of debt and so forth. But what was your, when you first got out, and you're like, okay, what's your first thought when you got out of school? You kind of got that first job. What is your thought when it comes to savings and things like that? What came to mind, and what understanding or anything did you have of it?
I really didn't have much understanding or anything like that. I know Grandpa had a bunch invested or whatever, so sometimes we got some insights to that. But in terms of like companies, I didn't know anything like that. In terms of setting up a portfolio or anything, still just kind of blank or whatever. So there's Google and a couple other things at the time. But I think the main thing was Mom had helped me set up the Smart Schwab account. Yeah. So looking back on it, not sure if it was the greatest or worst idea or anything like that, but basically it was I needed $2,000, I think, to open it. So fortunately I was living at home at the time and was able to save that up maybe quicker than some people were. But that's how it all got started, was dumped it in the Smart Schwab account. And then you kind of had a couple parameters where you were, how risky you wanted the bets to be, or how much money you wanted to keep it in actual cash versus, bonds and stuff like that. And that was kind of my first, I guess, dabble into investing, if you want to call it that or whatever.
Yeah.
So yeah. And
so when did you learn like what is a stock and what's an ETF and what's a mutual fund? Because they're all very much different. The hard way?
Maybe I learned the hard way. Still, maybe to today, I don't know the difference between all of them. You can kind of go in there, do some quick research on maybe mutual funds and ETFs, and I think that's the majority of where my money is. So, I don't really bet on individual stocks like that. Don't know anything about bonds either, although I do know the percentages were a bit lower in the past few years, maybe ever since COVID. We've kind of been in like a tech rush or something like that. So I don't know if my mindset's been more geared or focused on that, but yeah.
And then you got into Bitcoin at an early stage of all this stuff. And you're the one that talked to me about it several times. I'm like, dude, I thought .com stuff was crazy. Then you started telling me about Bitcoin and the money you were making in Bitcoin and how you were staking it and all this other stuff. I'd love to talk about that at some time, because I mean, you were staking it in different areas. He's like, yeah, I just bought some and then I stake it over here and I'm getting a 10% rate of return on my money there. Plus Bitcoin's going up. Plus I'm doing stuff. And he was making money hand over fist. And that's why I was saying he went from ramen living basically in our basement to he's doing pretty darn well right now for himself. So I figured, who else better than to have, my son here, is when he was growing up, I was kind of a workaholic dad. I wasn't around much. That's what you probably had heard his comment. His mom helped him create a Schwab account. I was just gone all the time. So now I'm trying to be dad again. So that's why he's also joining us today. So here's what I want to do today, folks. Let's get over to, we're going to start talking investments. Okay. So here's what I did. I used DeepSeek. And I don't know out there anybody that's, you might be for it, you might be against it. Marcus, I know it's supposed to be like a Chinese company. Is it safe? Is it something I should be using? Or,
I use it. I also use ChatGPT.
I do that too.
They're not the sole source of all information or whatever. So it's always good to just kind of bounce a couple of them off each other and see what they compare or contrast.
Okay. So what I did in DeepSeek, and it's pretty simple, just Google DeepSeek. I said, I gave it this comment. I said, what would you have, or basically my thing was, how would you use the topic to millennials about investing? And here's what DeepSeek does. It doesn't make you think, it thinks and it thinks and it thinks and it continues to think. And then it comes down to here and it gives you an answer. Now, a couple other searches that we did using this tool, and it thinks a lot more than I would. So I just want to show you the background of things. Okay, so here's the first part. We're not going to go through this part, and this be a real big issue for some people. It's budgeting and investing. Fortunately, the young man above me, he doesn't really have a spending problem, and he's a saveaholic. He's kind of like me. And then we have my daughter, who is kind of like my wife. They keep the economy going. So between we save and they go out there and spend. So we'll maybe tackle a budgeting issue at some other point. But here's what we want to talk about today: the investment vehicles you can use. In today's video, we're going to talk about stocks, ETFs, and index funds. And those are what we call mutual funds. And then Marcus, if you wouldn't mind coming back on the week with me, and if you could take Bitcoin, and I know you know a ton about Bitcoin and staking and all these other things, and how people get involved in that. But if you're Marcus, I'll ask you a question. If you have a friend your age and they have $2,500 or $5,000 to their name, would you advise them, if that's all the money they had, to buy Bitcoin?
That's all the money they had? No.
Okay.
You got
that was my yeah.
Yep. I mean, you can always, if anything, you just split it up and do half and half, or if you want to do thirds and hold on to some of it for like a rainy day fund, but never advocate spending everything you have.
Got it. The whole thing is, you hear about all these people getting rich, but I mean, there's a lot of people that lost money. And then we can also, or Marcus can even also elaborate on how you hold a lot of this stuff, because he explained to me how you get a wallet and do these things. And I'm like, it's way too complicated for me. And then as technology came through, things got a much better. So let's get over to these stocks and ETFs. So here's what we had to ask the system when it comes to DeepSeek. Now, if you guys have any questions, feel free to please ask anything you have. Let's see. We have Silky Black. All my stocks are horribly in right now, maybe today or tomorrow. But if we're going to go in time, and I'm going to show you, we're actually going to do some research right here online to show you, well, let's get into it. If you've heard recently about inflation, okay, here's what inflation truly is. Here's what the inflation looked like over the last couple of years. And what a lot of people don't understand is this compounds on top of. Okay, so here, let's dive into this a little bit. Okay, so let's say, for example, inflation in 2021 was up 7%. What this means, basically, in its simplest terms, is you're losing 7% of your value dollar every year. Okay. And the next year was 6.5. Well, it didn't drop to 6.5. In 2022, the 6.5 was on top of the 7. Okay. So every year you're losing much value in your dollar. All right. That's just the simplest terms right there. Just Google the inflation rates. Okay. So you have money. Let's say you have money and you're going to put your money in the safest investments you could possibly think of. Okay. Those investments would be most likely a saving by the FDIC. Okay, so here's what those rate of returns look like over years. In 2022, it was 0.06. Basically, nothing. Okay, that's a saving rate. Okay, in 2022, here in 2022, we had inflation at 6.5%. So your dollar is losing 6.5% in its value each year, and you're putting in your money in a savings account and you're getting 0.06 appreciation. So you're losing your dollar's value every year. Okay, so now you're saying, okay, I'll put it in something with higher yield. And you go back over to here, and it was 2 at that time. Well, yeah, look at how much rates have increased over time from 2022 to 2024. This is because the Federal Reserve has raised rates astronomically over the last fight inflation, to fight this stuff. Okay, and they're kind of doing a decent job. So if inflation's chewing away at your value of your dollar this much, throughout the years, and then you're putting your money to work in investments at this, you're not even keeping up with inflation. Okay, so what do you do? So we went over to here and said, okay, I wanted to say this. Okay, provide me the top 5 ETFs and funds where I can buy the top 5 companies in the United States. And then not only do I want that, I wanted you to give me a 1, a 3, and a 5-year rate. And then I also want to know what the expense ratios are and the differences between these things. Okay, so this is what this system is doing in the back. All right. So, like Marcus was saying, don't put all your eggs in one basket. Marcus, do you own a lot of individual stocks at the moment, or are you mostly still in mutual funds and things like that?
Yeah, I'm a majority in mutual funds and a couple different ETFs. I think in terms of stocks, maybe I have 5 to 7 individuals, but those would be the smaller part of the portfolio as well too. So, and the one thing you touched on is you typed this into DeepSeek, I think you said it.
Yes,
and it it pulls all this information together, and you can keep feeding it little snippets, to refine your search and stuff. But this in the past takes hours and hours to compile the information. So it's a great tool, even though it seems like it might spit it out too quickly or anything like that. And like we said, you always have to, back up your information or double check this against second or third sources and stuff like that. But this right here is an incredible amount of information that just gets spit out in such a short period of time with technology these days.
Well, look, you're the one that introduced me to all this. I know the one day you're like, well, you went to Chat GPT and you actually made it was like a website or something for me in like a matter of minutes. I'm like, oh, they're digging in. So when we plugged this information into the DeepSeek, okay, it didn't just spit out the information. If you really want to dive into what it's thinking, this is what it's saying. It's saying all this stuff, and you can read it. Minimum investment. I wanted to know what the minimum investments. If you're watching this and you don't have $5,000, why should I talk to you about this is the greatest fund available, but you don't have enough money to get in? And no disrespect to you, but I was there. I remember I probably told Marcus when he was a kid, your first paycheck, I probably said, put away $50 a paycheck. Just put it away like it's a bill and forget about it. And I remember you recently told us a couple weeks ago, we were kind of talking financials, and I was all proud of him. And he's like, I did that. And, fortunately I was able to stay at home during that time, but I did that and I never looked back. And you've accumulated a good amount of money. So I'm proud of you, bud. So you go down through here, and here's, it's spitting out all the stuff, what the minimum investments are, things like that. Then I basically said, just put it side by side so it can make it, easy for me to understand. And here's what it is. Okay, so this is now telling me ranked by the lowest ratio and the highest ROI. There's a lot more to do with this. So, but now you have this all narrowed down to these funds right here. These are ETFs. And then you go down through here, and these are mutual funds. And I'll explain the difference here in a bit. It's the simplest form is kind of this I'll say in a second, but then it comes down here and it also says this: best overall ETF in the WISE, best mutual fund in the WISE, lowest cost assessment, and breaks it down. Then a whole bunch of other things. Okay, so basically, here's my understanding, and I hold both positions in these. Go ahead. I'm sorry.
One thing you could tag on top of that too is, and I'm sure you're going to touch on it later, but the the different brokerages or the firms in which you're able to invest with. So, a couple of those, look at the top ones. SPLG, I think, is coming from, is that a Schwab account? And then the next one is Vanguard, and the next one down is the iShares. Yeah. So they're all,
like, for
they
example,
are all giant funds and everything, and maybe dealing with the, where's the ETFs? Yeah. But another major factor there is the expense ratio. You don't want to be going across multiple brokerages or spreading yourself thin like that either. So I know we talked about you don't want to put all your eggs in one basket, but maybe when it comes to brokerages or something, that might be a different comment.
I mean, just you're good at math. I mean, you don't have to be a brain surgeon on this one. This expense ratio is low, but this is for simplistic reasons. Let's get rid of these two zeros here. Okay, the 0.0 in front of all these, just for amuse me for a second. So then that would say this expense factor was 2%. This was 3. This was 3. This was 9. And you're getting the same thing. So why would you spend 3 times the expense factor on this one versus this one? And then you can look into it. You can say, okay, let's dive into, this ETF. So that's basically this. So the biggest difference in mutual funds to me as a trader is an ETF trades like us. So Marcus, if you went in right now and you're like, okay, I want to buy this VU. I want to buy VU. And let's say it was a weekday and it was 3:00 on a weekday. Okay, you can jump in and you can go into your Schwab account and boom, type it, and you bought it. You're done. Okay, so let's say tomorrow it was up 50%. You're like, I'm out. I want to take my money out. You can go in, sell it right instantaneously. It sells. Okay, with a mutual fund, they have settlement dates. So, for example, if I want to go in and buy this Fidelity, whatever this one is, I can put in an order to buy, and it'll buy at the settlement at the end of the day. And then if I want to say in the morning, I know this is going to hell in a handbasket. I'm like, okay, I want to sell this. Can't sell immediately. I have to sell, put in my sell position. Then at the end of the day, when the market's closed and settles, then your position gets sold. It's really, that's what I don't like about it, because you can't do an instant transaction. So then
the other flip side of it is, and you were talking about how much people have to invest, is one of them is you're forced to buy an entire share, right, at the whatever the price is. Whereas in the other one right there is just a minimum investment. You can put in 5, 10, you can put $7.15 if you wanted to do that much.
Right. Yep. So then we say, well, Marcus was saying, if you guys want, I actually created an account for you guys down. If you want to create an account with Schwab, you can do it right down through there with friends and referral thing if you want it. But I've used it probably for 30 years. And the reason why Marcus used it is because that's what our whole family uses, and we're used to it. And it is the simplest. Did you have any problems when you and Mom created an account? Did you? I know I helped you at the beginning a little bit with some of the things. Was it fairly simple? I mean,
it was. I think it was right when I graduated, so I'm not sure, in terms of like actual documents that you need to take in for that, but I would think it would be pretty standard and coming in blank to that. But like a driver's license or items like that of credentials.
But when you went in though, when you had, let's say you had $250 to invest or $500 to invest, when you first got involved, you choose that Schwab managed fund for like beginners?
Yes, I did. Yep.
Okay. So, and it wasn't that hard. It basically walked you through it. You chose it and you were good to go.
Yeah, it was super simple. Maybe I can't tell you how long the setup was, but
got it. So, do you guys want to create a Schwab account? Please use the link down below. I'd love for you guys to use that. So now what we did is we researched down to this ETF. Okay, so now you see all these ETFs. How do you research them? Okay, so I'm going to take this SLG. Marcus, what do you? I'm not trying to put you on this, so don't. But because I know you most likely know this. What is that, and what do you use it for?
SPLG. I'm not sure what.
Yeah, it's
it's like the actual. You mean the ticker symbol?
Like yes, that's what I was getting.
With the ticker symbol. It's a ticker symbol. It's a nomenclature for that company or stock or whatever the title of that might be. And it's like a 3 or 4 letter sequence of letters or whatever that you can plug into any of your firms, and it'll go ahead and pull up that actual thing. I don't know. It's a nomenclature to refer to a company or an ETF or a mutual fund.
So all you need to do is kind of take that symbol. It's called the ticker symbol. Move it over to, I like Yahoo Finance. I think it's fantastic and it's free. You can go to Yahoo Finance and type in the ticker symbol. I'll just put it right up here. Control V. I'll copy and paste it. It was the wrong thing, but you get my point. And here's up. Okay, so now here's all the financials for this company. And we'll brown real quick, but I just want you to see through here. Remember, we were going back to here. Here's the inflation rates. Okay, and this is the one thing I really, can't strive on. even though inflation was up 2.1% in 2016 and 2.1% in 2017, you're like, no, it's not. It's compounding on itself. It went up 2.1% in that year. Then it went up in 2017, another 2.1%. And then 2018, another one. So it compounds on itself. Okay. So you have to be able to outrun this stuff. And you're surely not getting it through these things. So we got to go over to here and figure out how do we keep up with the inflation numbers. So here's this. We look at a 1-year factor in the S&P, that ticker symbol that we just saw. It's up 17.4% here last year, 2024. What was the inflation rate in 2020? 2.9. Now you're talking. Okay, so now you made a return at 7%. And then even after inflation, you're up still 13, 14%. So this is how the rich get richer, and this is how the poor get poorer. If you don't have an investment strategy, then you're not going to keep up with inflation, and you might as well, that's basically the whole gist of the thing. Mark, what's your take on all this stuff? What's a good topic that we can or just a kind of something to drill down into, maybe to help people understand some things a little bit more?
The two big things too are to focus on, the ETFs or the funds that are going to spread you across multiple segments to make sure you have that nest egg, to make sure you are safe, when certain sectors or whatever have those red days. But the other major portion of this is the amount of time that your money's in that market. If you look at the graphs or whatever, sometimes over the first 1, 2, 3, 5 years or whatever, it doesn't trend. I don't have the stats in front of me or whatever, but it's like the percentage of people that make or lose money over time. And it's pretty high when you're in only a couple of years, but by the time you get to 10 or 15 or whatever, it's like 0.1%, or you really, really have to try in order to lose money across that period of time. So you were looking here and you were looking at maybe the 17% over the past year. You could zoom out a lot farther and you could make it look like the graph would look smooth and maybe looks like it's trending up more, but you could do the opposite and you could click on one day there and that thing's going to look like crazy. And if if you're making some rash decisions or you're not keeping it in there, you're panicking or anything like that, then those are also negatives to focus on. So yeah, I just want you clicked on the 1 year and it did show 17%, and overall generally looks like it's trending upward there. But if you were to look at a month or whatever, there's a period of time towards the center of that graph where you'd be trending down the whole time.
Yep.
And
it's kind of, yeah. Well, we had the same discussion with a lot of homeowners. Marcus, let's talk. We'll talk financials, and we're talking millennial financials. You bought a house not too long ago. So many people coming in saying you'd be an idiot to buy a house. It's house prices are going to crash. Bad. This is good. Do you mind sharing a little bit about when you bought? Kind of, you don't have to give prices.
I think I did get pretty fortunate. We were heading into COVID. Now it's been 4 years almost. We're heading into COVID. We weren't totally sure what was happening there. I think the biggest thing was just the job market, and not sure if the economy was going to shut down or whatever. But buying the house was probably one of the best financial decisions I've ever made. And looking back, I might have even put myself more out on a limb and tried to get like a larger house or a larger investment at that time or whatever, because from my own perspective, everything's just been trending up. More recently, I don't know my comments about that though. With the rates, and I think that the houses are starting to stabilize here or whatever, but overall the economy, I haven't been paying attention to the trends too much, but it does seem like the percentages are still way up there.
Yeah. In your situation, you kind of don't have to. You bought a house. Are you up money on how much you bought it for and what it's worth now?
Yep.
You refinance, so your payment is probably lower than if you had to rent out your house. Could you have a positive net cash flow?
Yes, I could at this point. Yep.
Okay. So, I mean, you hear all these stories about how I'm broke and how I'm this, how I'm that. Like Marcus was just saying, let's say you bought into this on here. Okay. And then you looked over and a couple, not too long ago, it was here. And it's like, just like the young lady says in here, it's in the red. Mm-hmm. You have to stay in the market, long. You go into, let's see how this did over time. So again, this is going all the way back to 2005. You go up through here and, again, 2001 market crash, you'd be like, oh my God. But then it went up and it's up 300 cents. So this is where, again, I can't stress enough the haves for have-nots. So again, if you want to create a Schwab account, you can do that. I'll have links down below in the thing. But that's basically all I really wanted to cover in today's show. So if you guys have any questions out there, Marcus and I would love to answer those. The show's went a little bit faster than I thought today, but I usually try to do these on a Saturday, but I thought I would, Marcus wasn't available yesterday. I wasn't feeling that good. And I reached out to him and said, hey, can you do that this afternoon? Help me out. And he's to it. So I can't thank you enough for helping me, Marcus. Anything out there that you think we might have shared or could have shared or elaborated on you can think of?
I think it's a learning experience for myself as well. It's the first time I've been on the channel or whatever. I've kind of helped out in the background a little bit and stuff like that, but to do some more mental prep for myself. But no, and I guess in the chat though, that question was posted a little bit of time ago, and I guess I would just ask how long have you been investing, or how long have those stocks been purchased while they are in the red? Oh, you're able to actually queue up the comment. That's really nice.
Yeah. So Patrick, my other son, he's usually in the background, but he's getting married in a couple weeks. So he didn't join us today, but Marcus, I'd love to have you keep coming on here with me. We'll prep a little bit better for the next time. But my whole goal, like I said, was just to help people in this task, because there's way too many. I came from a small little town in West Virginia and had nothing. And I was fortunate enough to move to Chicago. And the biggest reason was it was for me and my wife, but it was to give my kids a better opportunity. And so I took a huge risk, rolled the dice, and thank God it worked out. And I got 3 pretty good kids too. So thanks for joining me today, Marcus. Proud of you. And thank you, everybody. Please leave some comments down below how we can tweak these videos to help you a little bit more. That's our whole goal. There's no agenda here. My whole goal is to help you guys out there like you're my kids. And I want you guys to understand how the markets work and how the rich get richer and unfortunately the poor get poorer. So thanks for watching, folks. And Marcus, please, everybody give Marcus a kudos down below. There's also a tab down below if you want to buy us a cup of coffee. It's sure cold here in Chicago. So if you want to treat us to a cup of coffee, you can do that down below as well. So